Hi there, welcome to ET Now. You're watching Buy Now, Sell Now with me, Kanishka, Sarkar and Ankita Saxena. Over the next 1 hour, we'll take all your stock-specific queries with our experts. But before that, a quick look at how markets are faring. Ankita, another range-bound day coming in, though autos yet again are leading the charge there.
Absolutely, Kanishka. Hi, good morning to everyone from SBI Live Studios. Well, it's a show where we get all your questions answered, but before that, let's take stock of how the market is really shaping up. As Kanishka mentioned, a very range-bound trade coming in today. In fact, we are trading within the previous session's range as far as Nifty is concerned. 24,786 is where we are perched at, with an uptick of almost 45 odd points is what we are seeing right now. Nifty Bank, though, has turned red right now. In fact, we have given up all the morning gains. We are down almost 200 points from the day's highs on Nifty Banks right now. Sensex also has turned is trading in the green with an uptick of 100 odd points, but very range bound is what we are seeing on the frontline index. India Wix has spiked up 1.2% as of now. 10.91 is where India Wix is at. Let's look at the broader markets and let's pull up the chart for mid cap and small cap as well. If you look at the mid cap space, that's up and away 0.5%, and small caps trading with gains of 0.3%. So that's where the outperformance is really coming. Broader market is outperforming the benchmark indices. Sectorally then, we do have Nifty Auto that is in the fast lane. Now remember, a lot of automakers, M&M, Tata Motors, all of these counters have come out and they are saying that they will be passing on the GST relief to the consumers and they will be cutting off the prices before Navratri come 22nd of September, and you will have cheaper cars there. And on the back of that, we do have the auto pack that's buzzing away in trade. We have Bharat Forge, Ashok Leyland, Motherson, Tata Motors, M&M, Hero Moto. They're all trading upwards of 2.5+%. Besides that, we also have Nifty Metal that's shining away in trade today with gains of 1%. We have Nifty Realty and Nifty Energy also that is doing well. On the losing side, we have Nifty IT that is trading with cuts of 0.5% there, and Nifty Bank also, which is of course turned red right now, is underperforming the Nifty, but Nifty IT is the losing sector in today's trading session. Besides that, we have a couple of names that are buzzing. Let's look at those names. We have Tivo Tech that's up 6.7%. It's on the back of a Jefferies rating that's maintaining a buy call, and they've raised the target price to 1,800 rupees. We also have Adani Power that is up 5.3%. The company has set up a 750 megawatts hydroelectricity project in Bhutan. On the back of that, Adani Power is up in a way more than 5.5%. Angel One is also trading up 1.8% on the back of a buy rating by JM Financials, and on the back of that, that is also buzzing. Also, a couple of stocks that are making the new 52-week high today as Gujarat Mineral, and we have Ashok Leyland, Sirma, Acme Solar Holdings, M&M, Manappuram Finance. All of these are sitting at their 52-week high in today's trading session. And like I mentioned, it is the auto pack that is really leading from the front end, and the top Nifty gainers is M&M and Tata Motors and Hero Moto that are leading a charge from the front, and the advance decline ratio is tilted in the favor of advances. So we have the market breadth that is positive. But let's get on board our guests for today. We are joined by our market experts who will be taking all your questions. M. Chokalingam, who's joining us, and Akshay Bhagwat, who's a Senior Vice President, Derivatives, Financial, JM Financial Services, joining us. Hi, Mr. Chokalingam and Akshay. Thank you so much for taking the time out and joining us today. Let's get started with all the questions. The number is flashing on top of your screens, and you can start sending in us your questions and we'll be getting them answered. Well, let's get going with the first question then. We have Manoj, who's writing from Kerala, who's joining us on the phone line. Hi, Manoj. Thank you so much for joining us. Tell us what's your first question, and we'll get them answered by our expert. Manoj, can you hear us?
Here now.
Yeah, please fire away your question. What's your question, and who are you posing this question to, Akshay or Mr. Chokalingam? Go ahead.
I will been brought to 500 Tata Steel.
Okay, you have bought 500 shares of Tata Steel.
Yeah.
What's your question?
I will brought to 1,169. Brought.
Yeah, what's your question, Manoj?
Hello, madam.
Yes, please ask your question.
Madam, now I will to sell or holding the stock now.
Right, Mr. Chokalingam, let me come to you for this. He's bought Tata Steel. He's been holding it for the last 1 year, I believe, and he wants to know what should he do with Tata Steel at this juncture. You know that steel pack has been doing well. There is news of perhaps a demand recovery coming in. The steel pack might be in for a re-rating. Tata Steel, what do you see for Tata Steel for the next 1 or 2 year horizon then?
I have a negative view on steel industry because of this tariff war. We are seeing growth slowdown in the signs of deflationary conditions in many major economies in the world. The tariff war is definitely deflationary in nature. That would be negative for steel industry. I would prefer, in the large cap space, stock like Coal India. I believe in the next anywhere 6 months to 2 years, Coal India should be able to outperform Tata Steel by big margin because its demand outlook for coal is very robust. Dividend yield is also close to 7%. So the recent recovery in Tata Steel made it quite stretched in valuation considering the future outlook of the steel industry. So therefore, we would maintain sell call on Tata Steel and buy on Coal India.
ये मुझे text करो ना. Okay, so that's the view on Tata Steel. You could look at preferring Coal India over that. Manoj, hope your query was answered. But let's get to the next query then. This is coming from Govind, who's writing in from Hyderabad. His query is on Newgen software. He's been holding 500 shares and the price is 1,000 rupees. He wants to know whether he should average or book his losses. If he should not book his losses at the current juncture, he could hold it for a period of 2 to 3 years. Akshay, let me come to you. What do you think? What are the charts suggesting? Is it wise for the viewer to book their losses at this juncture?
First of all, good morning to all. Yes, based on the price and the volume analysis on slightly longer term charts, I think the price structure of Newgen Software Technical Limited is still in negative zone. There has been constant supply pressure building at higher levels, and lately it's been range bound, but the initial indications are that the stock might head for downside targets till around 750. So my view is to exit if your view is limited from short to medium term.
Okay, so that's the view on Newgen Software. But moving on to the next query, then our next caller is now joining us. This is Sandeep joining us from Noida. Hi, Sandeep. Very good morning. Which is the stock that you have a query on? Please shoot away.
Madam, I have 570 shares of IEX at the rate of 203. What is the long-term view on this share?
Okay. So IEX, Mr. Chokalingam, coming to you, what's the long-term view for this stock?
I've been quite negative on the stock for last 2 years in a row, ever since I came to know that, the Bombay Stock Exchange launched the power exchange business through JV. Even NSE started launching. So its monopoly structure in this industry is already broken long ago. It's going to be difficult to maintain the solid growth the way in which it was growing when it was a monopoly. So therefore, I believe that if the stock recovers even 10%, 15%, one should sell. It's going to be difficult for standalone power exchange business to compete with very big players like NSE or BSE. They have started through their joint ventures, so it's going to be very tough. So I would maintain a sell call on possible around 10% recovery on IEX.
All right, so that's the view coming in on IEX. I hope we've got your question answered. Thank you so much for calling us. Let's move on to the next question that's coming in. Somebody called Raghavendra, who's writing in from Bangalore, says he holds SJVN 1,000 shares at a buying price of 132 rupees. He wants to know what is a good time to is it a good time to average or exit at a loss? Akshay, let me come to you for this one. SJVN is sitting at a loss. Good time to average in, or is it an exit for you?
Well, see, based on the price action, I think if your view is for the next couple of months, the chances of the price staying in a range look high. It's already spent quite a considerable time in the range of 90 to 100 since last 1.5 month. And for the indications are it will continue to be range bound. So longer term is still positive. It is just that if you're looking for the appropriate average price, it has to be somewhere around 85 odd levels. So in case you happen to get these levels around 85, so from a long term investment perspective, that's a good rate to average out the stock.
Okay, so that's the view on SJVN. But moving on to the next query, this is coming from Manoj, who's writing in again from Mumbai. His query is on Indus Towers. He's bought 200 shares at a price of 360 rupees. He wants to know what's the road ahead for Indus Towers. Mr. Chokalingam, how are the fundamentals looking like?
Yeah, the stock has corrected. There is a little concern, particularly on the dues from Vodafone. But I think the stock is has corrected substantially to account for short-term pain. The long-term outlook remains intact because the telecom industry is going to be perennially a growth story, and there would be a good consistent demand for towers. So in the short term, it may not give any significant reward, but I think it's a good stock to hold or even buy on any further small decline also for medium to long term with investment horizon of more than a year.
Okay, so a good stock to hold if your investment horizon is more than a year. So that's the view on Indus Tower. But on that note, we'll take a very short break. Don't go anywhere. We'll answer more of your queries on the other side.
Welcome back. You tune into Buy Now Sell Now, where we get all your stock-specific questions answered. The number is flashing on top of your screens. You can keep writing into us, and we'll get them answered by our experts. Now, we have a caller joining us now, Venkatachalam, who's joining us from Chennai now. Hi, Venkat. Tell us, what is your question?
Good afternoon. Actually, I am holding the 100 shares of Avalon Technologies since the last 1 month, and I have already made a profit of 95,000 rupees in this share and re-entered at 862. I want to know the long-term and long-term outlook and fundamental also.
Okay, Akshay, let me come to you first. On the technicals, he's re-entered the stock. He's already made a profit. He's booked out. He's re-entered at 862 levels. He's also sitting at a profit right now. What are the levels to watch out for? And then we'll come for the fundamentals with Mr. Chokalingam.
See, the short term, there is a slight resistance area at 965. But looking at the broader perspective on the price volume analysis, my sense is that eventually this resistance of 965 should break and the stock should head for its all-time high levels near 1050, where we need to take a review as to the next line of action. But right now, continue to hold. 1050 would be the target area you can look forward to.
All right, so 1050 is the target that one can look at. That's the technical view coming in. But Mr. Chokalingam, let me come to you. What do you think are the fundamentals looking like? Are they as supportive? What's the long-term view for Avalon Tech?
Valuation looks little stretched. If you look at from starting from FY22 and then compare with FY25, the year-on-year average growth is not very impressive at all, but the stock is trading at exorbitant PE multiple. So therefore, I would maintain a sell call on a very significant rise from the current level.
That's a view on Avalon Tech, both technicals and fundamental view. I hope we got your question answered. But let's move on to a question that's coming in from Anjali, who's writing in from Chandigarh. ABFRL is a stock she holds. She wants to know, she wants to invest in ABFRL for the next 1 year. Mr. Chokalingam, what would be your call on ABFRL?
Unfortunately, I have not studied this stock, so I am not able to give any view right now.
Akshay then. Akshay, ABFRL, she's bought it at 82 rupees. She's sitting at a bit of a profit there. What should she do on the technicals? What do you see for the next 1 year?
So from a 1 year perspective, if you look at the monthly charts, there is a very strong support or demand area around the levels of 70 to 75 zone. In the previous instance, this was somewhere in March 2023. there was a second instance is March 2024, where multiple times the stock has recovered from the levels of 75 and has recovered all the way up till 130 level, which is almost the all-time high zones. So the same tendency or the same kind of price action can be seen once again. I would say that continue to hold. In case you want to maintain a stop loss will be 67, and the eventual targets from a 1-year investment horizon can be somewhere around 130 level once again.
That's the view on ABFRL. But moving on to the next query, this is coming from Sugumar, who's writing in from Chennai. He's a regular viewer, and he said that he wants to express heartfelt thanks and gratitude for this show that is Buy Now, Sell Now. Thank you so much, Sugumar, for those words. But let's take your query. That's on HPCL today. He's been holding 500 shares of HPCL at a price of 410. He wants, Akshay, your advice on whether he should add more at the current levels or switch to another stock or sell. What would your view be?
Yes, so HPCL has recovered from its short-term support zone, which is roughly around 375 levels. And going by the short-term price analytics, my sense is that this stock can move till levels of 420 to 425 zone. This is more of a short-term trading call. So if you're keen on the trading side of the stock, 425 is the upside. From that target perspective, you can buy the current levels with strict stop losses below 370. And if it's a long-term outlook, I think with a 1-year perspective, this stock looks more or less range-bound for me. So no long-term calls on this. It's more of a short-term trading bet, which I would like to recommend at the current levels for possible targets till 425.
That's the view coming in on. Right, that's the HPCL, that's the view coming in. Let's move on to the next question that's coming in from Sudha, who's writing in. She's a long-term investor. But we'll come to Sudha's question, but let's go to Manoj, who's writing in first. He's bought 200 shares of Ola Electric at a buying price of 70 rupees. What's the outlook? Mr. Chokalingam, Ola Electric, what would be your outlook for the next 1 year?
It's I mean, only the highly risk-taking investors can hold because I think, the recent turnaround in the EBITDA level in month of June is fully priced in. But medium to long term, I have little, fear on the stock's performance because it is going to be very difficult to compete with the traditional players who are making more than 15,000 crore of combined profit, who also entered and captured nearly 50% of the market share in EV two-wheeler. And the company also needs a lot of capex, and its market share has been on decline over the last 2-3 years significantly. And for the industry as a whole, even the realization from EV two-wheeler is going down consistently. So considering all that, I feel 1 or 2 years down the line, whatever possible prospects are there for the company, which are all already priced in at the current price. So I would maintain a sell call for every significant rise in the stock price from the current level.
Okay, so sell call on Ola Electric. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side. Hi there, welcome back to ET Now. You're joining us live from the SBI Live Studios. This is Buy Now, Sell Now with me, Kanishka, Sarkar and Ankita, Saxena. A show where we're taking all your stock-specific queries. We still have Mr. G. Chokalingam with us on the fundamentals and on the research. We are now joined by Manas Jaiswal. Hi Manas, very good morning to you. So let's get back to all the queries then. So this one is coming from Sudha, who's a long-term investor and needs advice on 2 stocks from Sirmas SGS, Alkyl Amines and Pricol. She wants to know, which is the best, which would be the 2 best picks among these 3. Mr. Chokalingam, you want to take this one?
Yeah, among these 3, if investor is asking, I would prefer Precall after the correction. This is a very quality company, quality management. This company has great long-term prospects.
All right, so that's the view coming in on these names. But let's move on to the next question. This is coming in from Narayan, who's writing in from Bangalore, he says he's a regular watcher of the show. Thank you so much, Narayan. And his question is that he has 700 shares of Mahindra Finance with an average buying price of 314 rupees for the last 1 year. He wants to know if he should continue to hold on to it or switch to some other name. Manas, let me come to you for this one. M&M Finance, what do you see on the charts for this counter? He's clearly sitting at a loss right now. What should he do right now? Should he cut his losses, or do you see there could be an upside perhaps?
I think one can hold the stock because we have seen a lot of consolidation in last, I think, 10 months time. Now, if it breaks 290, then definitely you may see the levels of around 340 to 350. So I think one can definitely hold it and keep the stop loss below 249.
Okay, so that's the view on M&M Financial. But moving on to the next query, Mr. Chokalingam, this is for you. The viewer hasn't really given us a time frame, but he wants to know a fundamental view on the auto pack. He has 100 shares of Hyundai and M&M respectively. His auto stocks are buzzing and they have been leading the chart on the street for the past few sessions, especially with respect to the GST rate cuts that will be implemented 22nd September onwards. But many companies have already started to roll in their discounts as far as auto companies are concerned. His particular queries on Hyundai and M&M. What is your view? What kind of upside are we expecting for these names?
Well, before GST reform, it was not able to beat the competitor like M&M. Of course, absolutely it is positive, GST reform, but I think in relative terms, other automobile majors would do better than Hyundai in terms of growth. So I would give a sell call on Hyundai. I would give a hold call. This is our official coverage also on M&M. We think 3,700 rupees is the fair target in the short term for M&M. At that price, one can sell. And within the automobile sector, I would prefer Bajaj Auto to buy. For a couple of reasons, GST reform will push up the two-wheeler sales growth significantly. And secondly, the most important point pertaining to Bajaj Auto is that in August, the exports of two-wheeler has grown at a very, very strong double digit, which is very big positive when the rupee is depreciating. Exports growing at that rate of over 40% will definitely, get benefited by the depreciation of rupee. The margin also will improve on the export business. So therefore, among these three major automobile stocks, we would maintain buy recommendation on Bajaj Auto.
All right, a buy recommendation coming on Bajaj Auto as far as the auto pack is concerned. Let's move on to the next question. This is coming from Sangeeta, who's writing from Mumbai. She wants to know the long-term view on RBL. She's bought at a buying price of 276. She's a long-term investor, Sangeeta. Let's get a quick tech check also. Manas, coming to you for RBL Bank. What do you see for the next 1 year on the technicals?
See, the structure is definitely very strong because we have seen some consolidation just few weeks back, but now since stock has given a fresh breakout on charts, I think the next target comes near 350 to 360. So for almost 75 to 85 rupees move, one can definitely hold the stock. One can even buy at current levels and keep the stop loss below 254.
Okay, so that's the view on RBL Bank. But moving on to the next query, this is Jacob writing in from UAE. He has two questions. First one is on Vari Energy. He has been holding 15 shares at a price of 3,263 rupees. And the other one is HAL. His buying price is 4,383 rupees. Again, 15 stocks is what he's holding. For both of these he purchased both of these counters on August 27, that is very recently, and his time horizon is 5 years. So, Mr. Chokalingam, what is your view, Vari Energies and HAL?
The time horizon of 5 years will be very big risk for, the new energy companies like Vari Energy, which is trading at over 40 times on trailing earning, because if you look at last 30 years, whenever new theme emerged in the economy as well as in the stock market, the competition got intensified and which pulled down the margin and also the rate of growth for individual companies. That is likely to happen in the renewable energy because even the big industrial houses have got into renewable energy space in a very big way. And therefore, in the long term, the competition would further intensify, margin would sink quite badly. So therefore, based on this anticipated industry trend as well as the current valuation, we would maintain sell call on Wari Energies. And HAL, I maintain a buy call. I'm pretty confident that the kind of advances they receive that would continue, which is a big boost to the bottom line. Plus, the order intake is very, very comfortable. So I would give a buy call on HAL.
All right, a buy call coming in on HAL there. Let's move on to the next question. The next question is coming in by Sunil Kumar. He says he holds 300 shares of Tata Motors at a buying price of 550. He wants to know if he should hold it or and increase it for the longer term. Mr. Chokalingam, what do you see on Tata Motors? We did see some global headwinds coming in, but now the way that all these auto stocks have recovered, the way they are doing right now. What do you see for Tata Motors in the long run?
It is little early to see how Tata Motor is going to benefit from GST and grow its sales as compared to the competitors, because it was not doing that great as compared to competitors till August. So, and also as you also talked about the global factors, there is a lot of headwinds for Tata Motor in my view. So I would move to safer stock in automobile space. As I already mentioned, I would prefer Bajaj Auto to Tata Motors.
Okay, so that's the view on Tata Motors and Bajaj Auto. But moving on to the next query then. So this is Mr. Ahuja. He wants to know, should he sell Triveni turbines at this juncture? He's sitting with a loss of nearly 10% in the past 2 months. And should he buy into Granules or Global Health or Trent for that matter for a period of about 1 year? Manas, what do you think? What are the charts suggesting?
So I think this is a good idea to sell Triveni turbine, because here the trend is negative. Stock has been making lower tops and lower bottoms from the level of around 670. And I believe that stock can go down and test 450, where the 200-week moving average lies. So I think here the trend is negative. So I think here one can definitely exit from the long position, and one can definitely invest in trend, because in trend we have already seen correction. Stock has given a confirmation of higher tops and higher bottoms. It is trading very near its 200-day moving average. But looking at the pattern, I think the stock has already made a bottom near 4,900 mark. So keep the stop loss below 4,900. You can buy trend at current levels, and you can set the bigger target of around 7,500 in trend.
All right, so that's the view coming in on Trent. But let's move on to the next question that's coming specifically for Mr. Chokalingam. This is Dr. P.N. Rao, who's writing from Hyderabad. He says that he wants a few suggestions on the mid and the small cap stocks for the longer term. Mr. Chokalingam, in this market, clearly the broader end has been outperforming for the last 2-3 sessions. Tell us, where do you see value as far as the mid and the small caps are concerned?
Yeah. So you rightly mentioned about outperformance of the broader market. Even I was surprised, because we looked at the last 2-3 decades of the relative performance of small and mid cap vis-a-vis Sensex Nifty. Every third or fourth year there was a major correction, and this segment underperformed. But that's not happening now. Now, fortunately or unfortunately, that is not going to happen even for the next 1 or 2 years, because FIs are selling, and they are largely selling the large cap stocks. On the other hand, the retail investors are pouring. Even last week, more than 6.3 lakh new investors have entered the market. So every week, around more than 6 lakh investors are entering. And we all know most of the new investors prefer small and mid caps. Even the DI money is nothing but ultimately retail money. So there is going to be a lot of demand for small and mid cap, not only tactically, even fundamental basis. You have more than 4,000 stocks where there are a lot of opportunities for growth, because there are many unique business models, deep value stocks, rich investment companies available in this space. So therefore, I remain bullish for next 1 to 3 years once again. But one has to be very, very careful on the valuation, quality of management, quality of the balance sheet, and valuation comfort zone. Based on these three, I would pick up couple of stocks since you have asked. One is KCP Limited. Personally, also we have invested after recommending to our clients. I believe KCP Limited is a potential multi-bagger. It has got enormous intrinsic value. And second, East India Hotel. I believe that it has got enormous potential to perform. Hotel industry has got a very good tailwinds, and this company is going for massive expansion. Third, FDC Limited. 91% of the total business is from the domestic market. So therefore, we don't have to worry much about US trade war. And basically, domestic formulation is a very rich balance sheet, a lot of cash on the book, and a strong growth. We have seen many segments of this business in June quarter as well. This stock also we have invested after recommending to our clients. So these are the three stocks I am very, very optimistic for creating wealth.
Correct. So those are the three picks from Mr. Chokalingam on the from the mid and small cap space. But moving on to the next query, then Manas, coming to you. This is Thomas George writing in from Amsterdam. He wants to know your view on United Spirits. He's been holding 1,000 shares at a price of 11.80. He's made some profit. He's sitting with some profit. Do you think he should book out a little bit of that and invest in some and put his money in some other stock, or should he continue to hold? What are the charts suggesting?
Yeah, I think one should take a chance because we have seen some consolidation in last 3-4 weeks time, and the stock has a lot of support in the range of 1275 to 1250. So keep your stop loss below 1250. You can hold United Spirits. On the upside, the stock has resistance in the range of 1380 to 1400. If it breaks 1400, then definitely you can see the levels of around 1550 in medium term time. So one can definitely hold it. Keep the stop loss below 1250.
View coming on United Spirits on the charts, but coming to the next question, this is Abhijit who's writing in. He says he has Welspun Living. He's bought it at an average price of 131 rupees. He wants to know if you should be averaging it at this point or not. Manas, let me come to you for this one. Welspun Living, he's clearly sitting at a loss right now. What should he be doing with this counter?
See, I think one can hold the long position, keep the stop loss below 102. But if you want to add more position, then you should wait for a breakout. If it breaks 126, 127, then you can add more because in that case, stock can go up and test 150 to 160 levels. So right now, I think existing long can be held with a stop loss of 104.
Note, we are completely timed out in this edition of Buy Now Sell Now. Manas and Mr. Chokalingam, thank you so much for taking the time out and answering all the stock-specific questions. We'll see you tomorrow at 11 a.m. Keep sending in your questions on the number that's flashing on the top of your screens, and we'll be answering them tomorrow. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Markets at Noon is coming up next.